Stock futures were up this morning on news that jobless claims had declined more than forecast, but another weak number on home sales made investors more skeptical. And right now, the S&P 500 is about even on the day. Our next guest has real concerns about the U.S. economy, but still sees opportunities in specific U.S. companies. Joining me now is Randy Bateman, Chief Investment Officer at Huntington Asset Management. He helps oversee billions, $15 billion in assets. Randy, thanks for joining us. Let's talk, before we get to individual stocks, which I definitely want to hit on, what is your view on the economy at large? Because there seem to be so many headwinds, and yet we have bull after bull on. I can't believe, with the problems we face in housing, the problems in Europe, the problems in Asia, that you could continue to be bullish on this market.
Yeah. You know, there is an old economic axiom that for every bit of good news, there's an equal and opposite set of bad news. And you're focusing a little bit on the bad news. There's some good things that are out there as well. But, you know, we're looking at this economy as being really quite unique in the fact that, you know, we got PIMCO saying it's the new normal, and we're really saying it's the new abnormal, because there's a lot of things that this economy is facing that we've never seen before. You know, economists usually look at history to give them a guide. But I think I would go with what Meatloaf once said, which is, if you want my view of history, there's something you should know. The three men I admire most are Curly, Larry, and Moe. You can throw the history books out the window because this is different. I mean, we got new demographics that are hitting this country. We got new obligations that the monetary base and the debt and all the debt ceilings are bringing to us. We've got new regulations all across the spectrum. And those are issues that are not tiny. They can become game killers. But at the same time, we've got a lot of merger and acquisition activity, and that always excites investors. And it also causes a stimulation of more dividend increases. I think we've had 129 thus far this year, dividend instatements and stock buybacks. So, you know, there's some good news out there as well, and we like to dwell on the positive than we'd rather dwell on the negatives.
Randy, are companies that have tons of cash and are looking to give it back in one way or another part of your investment thesis here? I mean, are those some of the companies that you like?
You know, during the past few years with this tenuous economy, we've seen earnings do extremely well. I mean, for the last 9 quarters, corporate America has exceeded analyst expectations by fairly significant margins. That started to slow this last quarter. I think it was 67% as opposed to typically 80. But there's a lot of cash that's been built up on these balance sheets. I hear $1.8 trillion thrown around. And if that's the case, nobody wants to self-fund their own takeover. So you're going to see that cash be expended, and it's going to be expended in the terms of dividends and stock buybacks.
Let's talk about the companies you like. Let's talk about the companies you like here, Randy. What are they?
Well, you know, I like sectors. It's hard for me to identify names because of where we stand in the community, but we do an awful lot like those areas that are going to be able to attack the growth areas of the world. I mean, we think we're in a intrinsically slower growing economy in the United States. I don't think there's any question about that. But I think that, you know, if you look at other areas of the world that are more dynamically growing, China, India, Indonesia, Brazil, those are countries that are going to need an awful lot of infrastructure build as they build this middle class. And we think that anything we can export is going to be attractive. And that's going to be those machinery and manufacturing companies. It's going to be those ag companies. It's going to be the mining efforts, the coal distribution that we have from this country to the other countries, and technology. I think technology is an exportable thing. The unfortunate thing is we live in a service-based economy. So if we can isolate those areas that do have export opportunities, I think that's going to be your real winners in the next few years, Matt. Got it.
Hey, Randy, thanks so much for joining us. Really appreciate it. Randy Bateman there from Huntington Asset Management out of the great state of Ohio.